Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, August 22nd, 2011 is brought to you by Realtic. All right, let's get right into the mix today. Markets are trading slightly higher on the day. Been a little bit of a roller coaster type move today. You can see we had this ginormous gap higher, well above the 115 level on the SPY, which is mirroring the S&P 500 as an ETF, and ultimately the sell-off took place almost immediately. Markets floated down, right around the 50 and the 20. They got a little bit of a bounce, ultimately broke down again, came down to the lower areas, and right here, right around noon, 12 p.m. Eastern time, the markets hit gap fill. Now, for those of us that follow gap fill and understand technical analysis, we know that gap fill is generally a very strong support level, and sure enough, this is where the market closed on Friday. This is the low of the day today. So see how it somehow finds its way back to that gap fill? I know traders that out there just play gap fills. That's the only type of trade they will take all day long is specific gap fills, and they make a ton of money off of it. So again, it's all about patience and discipline. And here, sure enough, you can see a perfect gap fill. And look at the market since then. I mean, essentially, gap fill was 112.46 on the SPY, and the markets came all the way back within about an hour's time to go to 113.90. So basically a $1.50 move on the spiders off of that pivot low gap fill. Now, since then, they've started to come back in again, and you can see the roller coaster type ride. A long sell-off here into the lunch hour, then a float as volume gets a little bit lighter, and now a little early mid-afternoon late selling here coming in to play. Now, I happen to believe that the pivot low right here from Friday's close is the big level. I mean, this is a master level in terms of what you need to hold. I believe, and this is truthfully what I believe, folks, and this is what I'm trading off of, I believe the markets will literally either hold this level or break it in the next day and a half. So basically the rest of today and tomorrow. If you're going to break and go to the 110.25, which by the way, the 110.25 on the spiders is this pivot low right down here. If you're going to go down there, it's going to happen in the next day and a half, meaning the rest of today and Tuesday. If you don't do it by Tuesday, I truly believe this market will break up and we will start to advance for the next week and a half into the holiday Labor Day weekend. All right. In addition, Ben Bernanke will be speaking on Friday for an annual symposium meeting, and he will be talking at Jackson Hole. And the key is this announcement or this symposium, this speech that he's going to be giving. Last year, it's a once-a-year type thing, and last year he specifically unveiled QE2. So I think that's going to be one of the reasons why I think we can really see this market possibly either break in the next couple days, and if it doesn't break, start to head higher, because I don't see shorts really jumping out on a limb ahead of his speech, 1 or 2 days before his speech. I just don't think it's going to happen. Now, after his speech, could it get a little rocky if he doesn't say anything positive? Yeah, I mean, obviously it could, but I don't think he'll do that. I think he won't talk about QE3 in terms of that it's going to happen, but I think he'll be very positive on what steps need to be taken and that the Fed will backstop this economy with whatever means that they need to do. So I think, again, that you're really setting yourself up for the holidays approaching. We have Bernanke talking on Friday. We have gold at highs where it needs to pull back, and if gold starts to pull back soon, then you're going to see money flowing out of gold into the stock market. And again, this is all contingent on the next 2 days. If we break through this level on the 10-minute chart on a closing basis, if you close today, for instance, between 112 or around 112.50 to 112.65, if you close below that level today, then I do think the markets probably go test that 110.25 level. If they don't, then I think we head higher. If we don't break that by tomorrow, we head higher Wednesday, Thursday, and into Friday into Ben Bernanke's speech. All right, so really some interesting things going on here. We have to continue to watch very, very closely. All right, some other keys to go over. Gold today is a major performer. I mean, look at this move on the GLD today, up $4.20. And this is another very peculiar kind of divergence. I have to make this point here. Gold is soaring today. I mean, up $4.20 on the GLD is a huge move in gold. If we look at the daily chart as well, look at this extension move on the GLD. It is a monstrous move, all right? Now, what's going on here? Because gold is a fear factor, so fear is continuing to come in here. That's what pushes up gold. But the markets are also positive today. Not a lot, but they are up. The Dow Jones Industrial Average is up 85 points, Nasdaq's up 11, and the S&P 500 is up about 6, basically 0.5%. So why is there this negative divergence either in the markets or in gold? One of them has to give here soon. Is gold right where the gold is telling us we're going to have another fall, or is the market right telling us gold will correct soon and come to the downside? It's a tough question. One thing I would say is the gold is extremely extended, and if there's one thing I've heard out in the public, folks, and you know I'm a contrarian indicator, I'm totally all about taking what the average person's doing right now in mass and going the opposite way. And there's one thing I've heard, it's everyone's buying gold right now. Everyone on TV is talking about it. It's basically a bubble in the making here in the short term. Now, ultimately, long term gold is going to continue to go higher, I think. But short term, it needs to correct. I do think you have a pullback here, possibly at least to this little pivot high right around here, which would be at the 175 level minimally, maybe even down to the 20 moving average. And again, the question is the negative divergence on the side of the market or on gold? Which one's going to break here? Either markets break to the upside and gold comes down, or markets break down and gold continues to go up. All right, very interesting divergence there. Let's take a look at the dollar today. The dollar is slightly higher, and you can see as the dollar has trended higher, and this is really the biggest thing to note here. Take a look at this. The dollar opened lower, and the markets opened higher. The dollar rallied until about noon, and where did the markets go into noon? If we go back to the spiders, which again mirror the S&P 500, you can see that whole move up on the dollar is reversed by the markets. So the markets are continuing to move in the inverse to the markets, meaning that they control to everything. Whichever way the dollar is going, the markets will go in the opposite way. All right, so just keep that in mind, folks. Markets are getting a little bit of a bid. I think it's interesting how we bounced up here to this green trend line, the 50-moving average, pulled back to this little orange trend line right down here, and are getting a little bit of a bounce. You can see the levels working very, very nicely. There were some great scalps this morning in the intraday stock chat as well. All right, the intraday stock chat, very, very key there. We continue to make money on an intraday basis early in the morning today. Tons of scalps. A little towards the lunch hour, got a little bit quieter, but that's expected in late August with lunch coming into play. All right, what else do we want to talk about? Let's talk about free trial, folks. There's a free trial, 7 days, for the Research Center, which includes videos every single day, live broadcasts once or twice a week. You have the daily market reports with key levels on the markets, on gold, the bonds, you name it, everything there, currencies. It's covered. These are expert levels given to you by chief market strategists that have studied the market for decades at this point. And again, the winning trades will continue to fly. We will continue to push out as much positive key data to help you learn and educate yourself as possible, as we continue to do every single day, every single night. It's there for the taking. Live trades are given here in terms of swing trades and investing options. We're giving those basically every single day as well. That's a 7-day free trial, no risk. As long as you cancel before the end of the 7 days, there's no obligation whatsoever. All right. In addition, there's a 7-day free trial to the to the intraday stock chat. That's live analysis, live charts, live questions. We're going to give you live trades throughout the day. And again, I'm in there. I'm on break right now. My partner, Chief Market Strategist Nick Santiago, is taking it for now. But just keep that in mind, guys. That's what it's all about right now, giving you guys the best information, the same information we're giving to the hedge funds we consult with. That's the bottom line. You want it? Just sign up for the Research Center or the Intraday Stock Chat, and you'll get it. That's all it is. Alrighty, guys. Markets, again, are kind of hovering here. Be interesting to see where this market closes. Watch this low pivot of 112.50 approximately. That is going to be the major level of the day. If we close above that and we stay above it tomorrow, then I think this market is going back up. Not huge back up, but back up until after the Labor Day holiday when it will turn down again. And if we break this low into the close or tomorrow, then I think this market could easily head lower to the 110.25 level on the spiders, and possibly, if it breaks, down to 104.50. Alrighty, guys, enough said. Have a great afternoon, great evening. I'll see you in the nightly video tonight. Take care.